Hello, everyone. Over the past 2 years, one company has completely dominated the conversation around artificial intelligence, and that company is Nvidia. Its stock price has exploded by more than 1,600% since ChatGPT was launched in late 2022. Today, Nvidia is valued at over $3 trillion, making it one of the most valuable companies in the world. But with such massive growth comes an important question. Is Nvidia's rise truly justified, or are we looking at another tech bubble in the making? In this video, we will break down Nvidia's incredible rise, understand why it became the biggest winner of the AI boom, analyze whether its valuation is reasonable, and discuss the real risks that could impact its future. If you're an investor or simply someone interested in understanding the AI revolution and its impact on the stock market, this video will give you a clear and balanced perspective. Let's dive in. Chapter 1: Why Nvidia became the AI king. To understand Nvidia's dominance, we first need to understand what changed in the world of artificial intelligence. For many years, Nvidia was primarily known as a company that made graphics cards for gaming. However, the rise of artificial intelligence completely changed its trajectory. The key technology behind modern AI, especially large language models like ChatGPT, requires massive parallel computing power. This is exactly where Nvidia's GPUs, graphics processing units, excel. Nvidia didn't just have good hardware, it also built a powerful software platform called CUDA, which made it much easier for developers and researchers to use its chips for AI training. Over time, this created a strong ecosystem that was very difficult for competitors to replicate. Today, when companies like OpenAI, Google, Microsoft, and Meta want to train their most advanced AI models, they heavily rely on Nvidia's chips. This has given Nvidia a near-monopoly position in the high-end AI chip market. In simple terms, Nvidia didn't just benefit from the AI boom, it became the foundation on which much of the AI boom is being built. Chapter 2: Nvidia's explosive growth explained. Nvidia's financial performance over the last few years has been extraordinary. Its revenue has grown at an incredible pace, driven almost entirely by demand for its AI chips. In its most recent fiscal year, Nvidia reported revenue of over $96 billion, with a large portion coming from its data center segment, which includes AI chips. Just a few years ago, this segment was much smaller. This shows how quickly AI demand has transformed the company. Its stock price has followed a similar path. Investors have rewarded Nvidia heavily for its dominant position in AI. At its peak, Nvidia briefly became the most valuable company in the world, surpassing even giants like Apple and Microsoft. However, such rapid growth also raises important questions about sustainability and valuation, which brings us to our next chapter. Chapter 3: Is Nvidia overvalued? This is one of the most debated questions in the market right now. Nvidia's valuation is extremely high by traditional standards. Its price-to-earnings ratio is significantly higher than most other large technology companies. This means investors are paying a premium price because they expect Nvidia's profits to grow very rapidly in the coming years. On one hand, this optimism is understandable. AI is still in its early stages, and demand for Nvidia's chips continues to be very strong. Many analysts believe that AI infrastructure spending will remain high for several more years. On the other hand, history has shown us that when companies trade at very high valuations, even small disappointments can lead to sharp corrections in stock price. If Nvidia fails to meet the extremely high expectations built into its current valuation, the stock could face significant downside risk. The key question is whether Nvidia's future growth will be strong enough to justify its current price. This is something every investor needs to carefully consider. Chapter 4: Major risks Nvidia is facing. Despite its current dominance, Nvidia is not without risks. There are several important challenges that could impact its future growth. First, competition is increasing. Companies like AMD, Google, Amazon, and Microsoft are developing their own AI chips. While these alternatives are not yet as powerful as Nvidia's, they are improving rapidly. If they become good enough, some customers may shift away from Nvidia. Second, there is growing concern about whether AI spending will continue at the current pace. Many big tech companies are spending tens of billions of dollars on AI infrastructure. If the returns on these investments are slower than expected, companies may reduce their spending in the future. Third, geopolitical risks are also a concern. A large portion of Nvidia's chips are manufactured in Taiwan. Any tension between the United States and China over Taiwan could create serious supply chain problems for Nvidia. These risks do not mean Nvidia will fail, but they are important factors that could affect its long-term performance. Chapter 5. What happens if AI hype slows down? One of the biggest uncertainties around Nvidia is what will happen if the current excitement around AI begins to cool down. Right now, much of Nvidia's growth is being driven by massive investments in AI by big technology companies. If these companies start seeing slower returns on their AI investments, they may cut back on spending. This could directly impact Nvidia's revenue and growth rate. Additionally, if AI technology fails to deliver the revolutionary changes that many people are expecting, investor sentiment toward AI stocks could shift quickly. We have seen similar patterns in the past with other technology trends. It is important to remember that while AI is a powerful technology, its real-world impact may take longer to materialize than the market currently expects. This gap between expectations and reality is often where bubbles form and eventually burst. Conclusion plus key takeaways. Nvidia has undoubtedly been the biggest winner of the current AI boom. Its technology has become essential for training advanced AI models, and its financial performance has been exceptional. However, its extremely high valuation also comes with significant risks. Competition is rising, AI spending may not continue at the current pace forever, and geopolitical issues add another layer of uncertainty. For investors, the key takeaway is this. While Nvidia is a strong company with a dominant position, its stock price already reflects very optimistic expectations. Anyone considering investing in Nvidia should carefully weigh both the opportunities and the risks. As always, it is important to do your own research and never invest more than you can afford to lose. High-growth stocks can deliver excellent returns, but they can also experience sharp declines when expectations are not met. Thank you for watching this video. If you found it helpful, please like and subscribe to the channel for more in-depth analysis of technology and financial markets. In the comments, let me know your thoughts. Do you believe Nvidia is currently in a bubble, or do you think its growth will continue for many years? I'll see you in the next video. Take care.